Welcome to another episode of HDFC Life Presents Live Sessions, partnered by ET Now, where we decode the ideas that are shaping India's financial confidence and long-term security. Today, we're diving into a crucial conversation at the intersection of credit, protection, and India's MSME growth story. With lending becoming faster and more accessible than ever before, borrowers and lenders face new layers of risk. And in this evolving credit landscape, products like Credit Protect are emerging as essential safeguards, strengthening portfolios, securing families, and enabling responsible growth. And to unpack this very topic, we're joined by two leaders who sit at the heart of India's lending and protection ecosystem. Uday Suvarna, CEO of Hiranandani Financial Services, and Vikram Vaswani, Group Head Key Alliances at HDFC Life. Together, they'll share insights on the role of credit protection, the financial behavior of India's MSMEs, and how Tier 2 and Tier 3 India can become more resilient with the right protection solutions. So let's dive right in. Uday, Vikram, thank you so much for taking the time to join us in studio on this special session of Live Sessions. How are you?
Yeah, good. Thank you for having us here.
Thank you for having us.
It's
Pleasure to have you with us. Now, Uday, if I could kick off the conversation with you. In the current scenario, NPAs are on the rise, right? And I believe that borrowers are becoming increasingly conscious about passing on financial burdens to their loved ones. So while the borrowing process has perhaps simplified, the levels of risk, whether it be by the borrower or the lender, have in many ways multiplied. In that scenario, how do solutions such as Credit Protect act as a safeguard?
Sure. So the way I look at it, there are two parts to this question. One is increase in credit access, which is leading to increase in risk.
Absolutely.
And second is how does Credit Protect help you, manage some of this risk, right? So yes, you're absolutely right. With technology advancement, the credit access has become more wider and inclusive. Lenders have been able to reach locations, they have been able to reach segments which were earlier very challenging,
Underserved.
Underserved, and also were deemed to be cost ineffective, right? But technology has helped take care of all these issues, right? I mean, lending definitely has become more simpler, faster, minimal paperwork, right? This has led to a lot of credit offtake and increase in penetration. But all this has also led to increase in the associated risks with these lending on multiple counts, right? So one of them is definitely over leveraging of the cash flows,
Right.
or over leveraging of the collateral that the customer has.
Sure.
That's the first part. So, now coming to Credit Protect as a tool, with the increase in leverage, there will be stress not only on the lender's lending portfolio, but also on the borrower's cash flows, right?
Right.
And if you see, usually in a loan, the person who is paying the EMI is the only income earner in most of the cases, right? Or is the main income earner on whom the debt repayment depends.
Sure.
So when you have a tool like Credit Protect, which takes care of any adverse event in that main income earner's life, it helps reduce the burden or the stress on the borrower, because he is assured that in case any adverse event happens,
Right.
and if he is not there to service the loan, the burden does not pass on to his immediate family members.
Sure.
For the lender, it's also an assurance that it takes care of their key man risk, and since that risk is mitigated, the lender can also offer better commercial terms. So I think in all, Credit Protect does serve as an important risk mitigant in this increasing stress scenario for lenders, as well as the borrower can be more assured about what will happen if he is not around to do the debt repayment.
Well, thank you for setting that context, Uday. And coming to you now, Vikram, building on some of Uday's observations, right? If we could do a bit more of a deep dive and get more granular by way of the safeguards that exist for both the borrower as well as the lender, perhaps by putting into context of everyday examples and a relatable scenario.
Sure. So, we have always been talking about, how life insurance is an important part of financial planning, right? I think it helps you, protect against risk of dying, dying young, living too long, and even critical illness, disability, and so on.
Right.
So obviously, in the last 25 years that the sector has got deregulated, there has been a lot of progress made on life insurance. Our penetration is still lower compared to some of the global
Counterparts.
markets.
Yep.
Now, specifically, what has happened is with the credit growth, being at where it is, I think, except for a few quarters where it has been little softer, but I think India as a economy, we see regular credit growth, and that is where Credit Protect comes in. So what Credit Protect really does, it helps you protect your liability that you have bought on the book, bought on yourself by taking a loan.
Right.
Now, does it solve for a particular loan? Actually, Credit Protect is a solution for all loans. It can be a mortgage, it can be a LAP, it can be a business loan, it can be loans that Hiranandani Financial gives to MSME and proprietors. So what Credit Protect does is, so if, for example, if I'm taking a loan for say 25 lakhs,
Right.
okay, it can be a business loan, right? Now the idea of taking this 25 lakhs is I want to grow my business, I can see potential, etc.
Sure.
Now, obviously, this is a liability because when I give a 25, when I've taken a 25 lakh loan, usually these loans are secured. So that means I have probably mortgaged something against it. Even if it is unsecured, is the liability still there on me and my family?
Right.
So what Credit Protect does, it's along with a 25 lakh loan, what we try to do is we give a 25 lakh insurance.
Payout.
Right? Insurance.
Insurance.
So in case something happens to the person, okay, he doesn't have to pay the loan, the insurance payout comes through and the loan is settled.
Right.
The financial burden is not there on the family as well, right? Because had this insurance cover not been there, the lender, would have gone and tried to recover the money.
Certainly.
Right? And sometimes it leads to a situation where the family is not able to pay and it leads to dilution of personal assets. So what we do is, given that the lender is doing the financial underwriting, in most cases we ride on the financial underwriting done by the lender, except for large cases where some underwriting, financial underwriting is done by the insurer as well. And most of the product, the way this product is structured is we want it to be completely frictionless. So most of the business, almost 98% of the business goes through without medical underwriting on the basis of declaration of good health or a short medical questionnaire. So he doesn't have to go through a full medical checkup, etc. So it makes it very, very frictionless. Also, what happens is the premium for the insurance, the Credit Protect insurance, is usually powered by the lender. So obviously the EMI for the borrower goes up slightly, but then obviously he doesn't have to shell out money himself. The premium is usually powered by the lender, and that makes the adoption also very easy. Okay, and what we've seen over a period of time, before COVID, while we offer this product across all loan segments, like I mentioned, before COVID, when this product was being offered, people felt, do I really need it? I have some insurance somewhere. Right. We know that in India, people are grossly underinsured, but still there is this thought that there is insurance. I already have some insurance. Okay. But after COVID, I think that's been a very good catalyst. People have understood the kind of risks they have taken by taking loans or even, not having enough cover to, take care of the human life value, like we call it. Right. So today, if we go and offer this product, I think the acceptance is much larger. We have seen penetration rates go up. When I mean penetration rates, on every 100 loans disbursed, how many people are really buying? Right. I think there's a big uptick on that number. And I think this is only progress as awareness on this product goes up. So what I would like to say, to sum it up, I think it was a good to have, but it has transitioned to a must have. That's the way I would like to put it.
I think you've put it in very tangible terms, and I want to touch on some of the points that you've made in posing my next question to Uday. So you mentioned the protection gap, which is of course staggering in this country, by largely led by the life insurance product in particular, right? And then you also mentioned MSMEs, correct? And at Hiranandani Financial, you're of course known for very intimately serving that sector. So my question is, when you think about the small business community, typically life insurance isn't the first product that comes to mind when They imagine financial planning or their portfolio strategization. So tell us more about how and where that product fits into not just their financial planning perhaps, but into the MSME's decision making at large.
Yeah, sure, Pooja. So at Hiranandani Finance, we serve the small business owner, right? We give loans to the small business owner for the business growth. That's our vision. And these are usually entrepreneurs who are running the show on their own, and the business operations completely depend on that one single person.
Right.
So, and the Indian small business entrepreneur is somebody who is willing to take risks and explore new opportunities,
Yes.
right? So, the loan is usually taken to expand his line of business or start an associated line of business.
Sure.
So, I would say for this segment, Credit Protect is a blessing, because from a lender's point of view, when we are underwriting the customer,
Right.
one question is always there in a mind saying, what will happen to our loan if this key man is not around, right? So Credit Protect definitely helps us take care of that risk, and focus on focus on the other risk associated with the loan and cash flows, etc. So, but a bigger risk other than the cash flow is, of course, as I said, it's dependent on one person. So Credit Protect definitely helps us take care of that. For the borrower,
right,
it's very important because he is the main income earner. If he is not around, who will pay the debt, right? So it becomes important from that point of view. He can breathe easy because he knows that at least this loan is taken care completely if even if he is not around.
Sure.
So it's usually when we explain this product to the customer, and if his family is around, his family also insists that if he's taking this loan to take a risk in his business and grow his business, that he opt for this protection, because they obviously do not want to be burdened with this, the debt repayment. And apart from that, if I have to add, along with Credit Protect, there are add-ons like critical illness cover. So not only in case of somebody's death, but even if the main income earner develops some critical illness, then how will the EMIs be paid, right?
Sure.
So the specific add-ons like critical illness cover helps cover even if the key person develops some illness, and then the loan gets repaid. So we have had many instances of customer coming back to us and customers' families coming back to us and thanking us that, we offered them this solution, because, of course, there have been instances where our borrowers some of them have passed away, and their families were anxious about what will happen, but then we explain to them that they need not worry, because the borrower has protected himself from HDFC Life. So all in all, I would say for this segment, it is very, very important that Credit Protect along with critical illness should be there for them to ensure that the families are not burdened.
Well, Uday, very similar to the SME segment coming to you now, Vikram, is of course self-employed individuals. All right. And there the risk is multifold, because personal and professional risk all seem to sort of intertwine. Correct? So they require perhaps enhanced protection, safeguarding, but to another level altogether. So how do you think about life insurance and the Credit Protect solution in particular vis-a-vis that community of individuals?
Yeah, so what happens is, like you said, these people, when, like Uday mentioned, why specifically for this segment, why are they taking these loans? They're taking the loans to scale up their business, get into another line of businesses associated or otherwise. So what really happens is there is already a liability which is there. Okay, now Credit Protect, offers you various benefits. Now, at the base level, Credit Protect offers you two options. One is a level cover. That means if the loan is for 25 lakhs, like I alluded earlier, you can offer a 25 lakhs cover.
Sure.
Okay. But as the person keeps paying the EMI, his loan outstanding goes down. Okay. And suppose he's paid the EMI for say 5-7 years and something happens to him. So what we do is we pay the outstanding amount to the lender. The balance goes to the family. That is called as a level cover. The second is there is a reducing cover, where the premium costs are slightly lower, What it essentially does is it matches with the loan amortization.
Okay.
So if I have paid say 7 EMIs, then my loan outstanding would have come down. Even his sum assured would have come down proportionately.
Sure.
So then what happens is it's a pure risk cover towards the loan. In case something happens to him, then the money is paid to the lender.
Right.
Right. So this is the base product that we offer. Obviously, our endeavor is to ensure that the entire loan amount is covered, the entire loan tenure is covered, because that is very important.
Right.
And to specifically look at how you can strengthen this protection layer that we have created. So we have add-ons like accidental death benefit. We have critical illness like Uday alluded to. We have disability. We can also bundle in other riders like cancer, surgical care, and so on and so forth.
Sure.
Now, what happens? I think Uday, with Hiranandani customers, we offering critical illness rider. So what happens is, in a critical illness rider, in case if I get one of the defined critical illnesses which are covered, then I get the critical illness rider payout immediately.
Sure.
At that point of time. But my basic policy continues.
Right.
So what happens is that money can come in handy. Suppose if somebody has got illness which probably is going to be away from work, and in most cases, like he said, they are breadwinners.
Right.
You have additional medical expenses, which the money can come in handy. You have your employees, the salaries have to go through. You maybe having some vendor obligations. You have your own household expenses. So when even at the stage of a critical illness, this additional money coming in is really another layer of protection.
Sure.
Okay. Now for customers like these, maybe a critical illness cover makes sense. When we sell the same product in the auto segment, for example, we sell an accidental rider.
Right.
What accidental rider does, suppose a basic cover, it's say a 20 lakh car loan. I will give him a 20 lakh accidental cover. In case the death is because of an accidental death, then he gets the 20 lakh and one more 20 lakh additional because of the accidental death.
Right. Right.
Similarly, we have riders like disability. In case there's a partial or a complete disability, there's a payout percentage of the sum assured, 50%, 75%, depending on the disability. That money comes in.
Right.
Again, it can help you pay your EMIs, take care of your dues, immediate expenses, medical expenses, and so on. So these are the options available to customers, and depending on the loans type, like I mentioned, we do credit protect across all kind of loans: mortgage, LAP, PL, agri, business loans, professional loans, MSME loans, and so on and so forth. So depending on what rider fits in well, and what is the philosophy that our lender has, accordingly we offer those kind of products. And there are also options of taking multiple riders.
Sure.
Right. So you can take 2 riders at a time along with your base cover.
Along with the option of reduced cover versus level cover models.
Yes.
Correct. Okay. Thank you for summarizing that. And coming to you now, we of course live in a digital India. And given the acceleration of digital infrastructure, lending and the process has completely revolutionized as well. Right? Fintechs have had a role to play there as well. So to what extent might making solutions like Credit Protect available from the onset of the lending process help accelerate this protection adoption?
So you're absolutely right. The growth in digital has definitely shaped consumer behavior.
Right.
So today customers now want all their purchases, be it loans or be it garments or be it insurance,
right,
to be convenient, quick, and I would say intuitive, right?
Sure.
With minimal friction.
Right.
And that's how technology has developed, right? So for loan processing also. So to give you an example, previously you would give your printouts of your KYC or your bank statements, but today if you see CKYC has made very validating KYC documents digital, right? An account aggregator network basically helps you analyze a customer's banking behavior digitally.
Right.
Now customers no longer need to print all your 6 months, 1 year bank statements and
correct,
KYC documents, printouts, and give it to the lender. So customers' expectation now is that even insurance should be as seamless as a digital loan journey, right? So when we go and explain the benefits of Credit Protect to a customer, most often he understands the positives and he is willing to opt for it, right? And he is willing to pay for the protection and the peace of mind it gives.
Sure.
But if the purchase process is cumbersome, he drops off.
Yeah.
Right. So, so the point is, he is very well aware about the benefits. He is willing to pay, but if you make it friction, you make it cumbersome, he doesn't want it.
Right.
Right. That's pretty much true, I think, for all the purchases we do now. Right.
Yeah.
So at Hiranandani Finance, what we have done is that we have integrated the insurance journey with our loan processing journey digitally, right? And we have worked very closely with HDFC Life, and thanks to them, we have integrated our systems, etc., so that along with our loan processing journey, we can continue. If the customer opts for Credit Protect, the journey for insurance onboarding also continues there. And because of that, I can definitely say it has helped us insure more lives than we were doing previously.
Yeah.
So the whole idea is to make it more and more convenient to the customer. And once he opts for it, then it is like click, click and done. That's pretty much how we are.
Well, certainly in an ideal scenario, but I believe that the scenario that Uday has just described, Vikram, is largely limited to the major metros in this country. There's still very much an urban-rural divide when it comes to perhaps protection adoption. So while credit growth may be on the rise nationwide, we're not quite seeing that same pace when it comes to protection adoption. So as you dig deep into the tier 2 and tier 3 interiors of the country, how do you approach the problem?
Yeah, so what we've been doing as an insurance company, I think we heard about the insurance for all by 2047. That's the
tenet of Viksit Bharat.
Yeah,
right.
So what we are doing is, obviously as HDFC Life, we are opening more branches in tier 2, tier 3. But what really helps us, partnering with companies like Hiranandani Financial and many others, is that it helps us build our distribution reach, in a very, very fast and economical manner.
Right.
We are proud to say that we work with about 300 plus partners, and we nurtured partnerships for the last 25 years of our existence.
Right.
And while our own branches were only about 650 to 700 HDFC Life branches across the country, with a partner network, we are probably far bigger number than that, right? And so what we do is, as our partners are increasing their regional footprint, we are along with them present, in terms of offering these solutions. And like Uday mentioned, there is so much that you can do digitally today.
Right.
We have various modes of working. We do realize that our partners are at different stages of, digital evolution, right? We have a complete API process where we integrate with the core loan system of the lender, right? So what it does is, the moment the loan is disbursed by the lender, and if the customer has opted for insurance, the moment the money is disbursed as a loan, the premium is disbursed to me and the policy is issued real time. That is a full integration. We have a part integration where the form can be filled digitally, and then it can come to us. And we also have some processes where data can be exchanged over safe transfer protocols, etc. So what we're trying to do here is, depending on where our partner is and what is the model, is it digital, is it phygital, or is it only physical?
Right.
Either ways, we are able to offer this product through all our partner network.
Right.
That's number one. Second, what we're also trying to do is, we're trying to look at how we can make this product how we can increase awareness on this product by having a lot of our collaterals, in regional languages,
Right.
A lot of our communication to the end customer. See, in this setup, while Hiranandani Financial, for example, today, that's the master policy holder.
Sure.
And every customer that they onboard is a member in the master policy. But if you look at it, while this is a group kind of a product, but ultimately the end customer is an individual, where
Sure.
you're actually trying to serve an individual.
Right.
So there, regional language collaterals, regional language, verification calls, regional language certificate of insurance, messages that we send out, communication that we do. So there is a lot of effort, happening on that direction to ensure that, while the credit growth in the country, is growing, it's going into deeper markets, tier 2, tier 3, tier 4. Along with our partners, we are riding that wave. And I think we do offer, like I said, we are one of the leading players on credit life in the private life insurance space. And we have been able to successfully offer this product across loan segments, across varied partners, large, mid-sized, smalls, including microfinance firms. In microfinance, the loans are really sub 50K.
Correct.
Right? But still, even there, we are able to cater to those markets.
Right.
And it is completely, like I said, Credit Protect is a low-touch product. Financial underwriting, we usually ride on the lender's financial underwriting. In larger cases, like, if you are home loans beyond 3-4 crores, then obviously medical underwriting comes in. But those are far and few, right? So overall, I think the way credit growth happens in India, I think with a partner like Hiranandani, we will ride the wave. We will participate in their growth story.
Sure.
And I think we should be a important partner, and we should be able to solve the protection gap that India has seen. So to sum it up, I would say that Credit Life, Credit Protect is definitely something which will here to stay, which will grow over a period of time. And I think the awareness levels will only go up and the penetration will only go up as we go along.
I think that makes for a wonderful note upon which to close. But Vikram and Uday, thank you so much for taking the time to speak with us, and we wish you and your teams all the continued success.
Thank you.
It's been a pleasure.
As we wrap today's discussion, one thing is clear. Credit and protection must grow hand in hand for India's economic engine to stay resilient. Whether it's safeguarding a borrower's family, securing an MSME's future, or enabling lenders to build healthier portfolios, Credit Protect isn't just an add-on, it's becoming a core pillar of responsible lending. With innovators like Hiranandani Financial Services expanding credit access, and HDFC Life strengthening protection at every stage of the customer journey, India's entrepreneurs are better placed than ever to grow with confidence. This is HDFC Life Presents Life Sessions, partnered by ET Now. Until next time, stay informed, stay protected, and stay financially secure.